It's Brian Preston, the money guy.
So I want to go a little deeper in this because Dave does talk about the 80% that's behavior, 20% that's headspace. Well, there's also, I think it goes beyond that, is that we know that the lion's share of Americans struggle with basic things, what I consider common sense of they can't get out of debt. Yep. They don't have the discipline to understand it. And we've often said, there is, and you just mentioned it, there will come a graduation or a jump-off point where you need to go beyond common sense. Right. And I think that's where we fit in. We are not the 80% or the portion of the public that struggles with basic behavioral stuff. We know that our audience are maximizers. Yep. They're kind of the money masters. We know that if this doesn't hit you, it's just you're not there yet. We are focusing on the 20% that wants to make sure every dollar in your army of dollars has a purpose and knows what they're doing, and you want to maximize it. So that's what we're going to focus on, and that's what we're going to look at it through that lens to see how does Dave's investment strategies, how do they fit into what we know as financial advisors about wealth creation?
So if we're going to talk about areas where possibly he misses it or possibly hits it, one of the questions you might be asking, well, what is Dave Ramsey's investment advice? So we actually went out to Ramsey Solutions, and I think this is on Chris Hogan's website, and he basically lays out how to diversify your portfolio. If you're structuring an investment portfolio, Dave likes using mutual funds. He likes using active mutual funds, and he thinks that an investment strategy should look something like this: 25% in international, 25% in growth and income, 25% in aggressive growth, and 25% in growth. That certainly sounds easy. Doesn't sound like that's a hard thing to put together.
Well, it sounds very broad and it sounds very growth-oriented, but I do like, because I think this is something that got fine-tuned as Chris came in as part of Ramsey Solutions, is he goes a step further. He actually tells you what are those broad descriptions like aggressive growth, growth and income. Is there, large cap, mid cap, sure, international? So what's the deeper dive on that?
So if you look at the details, growth and income, these are the big companies. These are the ones that have a market cap above $10 billion. Well, if you were to ask us at the Money Guy Show or Abound Wealth what that is, that's really large cap holdings, large cap U.S. companies. Well, then they said there's this growth asset class, and that generally tends to be companies that are somewhere between $2 billion to $10 billion. Well, we would just call those mid-sized or mid-cap companies. And then there's this aggressive growth, these high risk, high returns. These are companies that are smaller, they're less than $2 billion. So we would just call that small cap. Now, all three of these are U.S. These are all domestic. U.S. large cap, U.S. mid cap, U.S. small cap. And then lastly, there's this international bucket, companies that are outside of the United States.
So this is Dave's portfolio. It doesn't matter if you're 20, 65. I didn't see anything about bonds in there.
Nope. It's all equities, 25, 25, 25, 25.
So that leads to, now let's kind of pivot, and I want to talk about where are the areas that we think Dave goes astray, and then how do you fix it if you are at that graduation point that you want to go beyond common sense?
And so we were trying to think about the best way to lay this out. And we said, they're really, if we break this down in its basest form, we think there are probably three problems with Dave's investment strategy. And we think that those three problems are, number one, Dave does not like index investing. We're going to talk about why we fall on the other side of that. Number two is Dave doesn't balance risk and return in our opinion. We think if you're going to be an investor, there's a better way to do that than what Dave recommends. And then Dave has a one-size-fits-all approach to investing. No matter where you are in your life cycle or life stage, this investment portfolio makes sense for you.
So we want to kind of go a deep dive into all three of these and then even tell you, I think it goes a step further. How do you fix it?
Sure.
I think that's an important. I don't like people just to sit in the cheap seats, start throwing popcorn at without giving you solutions. So we're actually going to do a deeper dive into every one of these.